Welcome to Financial Freedom and Finance channel. Here we upload videos to give you a helping hand in reaching your financial goals. We hope to give you tips for achieving financial freedom using finance one video at a time. If you are new here, do not forget to subscribe to our channel for more videos about financial literacy. Today we are going to talk about assets and liabilities, specifically how to convert liabilities into assets. How to convert your house into an asset. This is a question everybody asks. This is financial education, and probably 95% of college graduates don't know what a financial statement is. If you didn't take an accounting class at school, most likely you don't know. There are 4 basic words in financial education, and those words are income, expense, assets, and liability. The last 2 words are the words cash flow. Explaining these words. Let's say that you get a job, you work hard, so you have income. The first line of expense is taxes. This is a typical cash flow of a poor person that is employed and works as an employee. It doesn't matter how much money you're making. The majority of people cannot control the cash flowing out through the expenses. They also use credit cards all the time and do not live belong to their needs. We are talking here about poor people. Let's discuss now the cash flow patterns of middle-class people. This is where the asset or liability comes in, the house. What the majority of people do when they get paid and have a steady salary is buying themselves a big house thinking that the house is an asset. Now, the question is, who told you that? Very likely the real estate agent trying to give you that false sense of security while you are getting screwed. And let me explain to you what happens with the house or personal residence where you live. Well, the money that you get paid working hard in your job goes out through the mortgage that you have to pay for that house that you just bought. You will have a mortgage payment every month for the next 30 years. So, that is why the house is not an asset, because it's taking money from your pocket. Putting it in a very simple way, assets put money in your pocket, and liability take money from your pocket. It's not buying a house or no, it's the cash flow. Where is the cash flowing? That is the question. The ability to control cash flow is the financial intelligence in this case. They don't teach you this matter in school. They usually encourage you to go to college, get a job, work hard, save money and buy houses and cars. Cars are also a liability. You must buy the insurance and put gasoline. Now, like I mentioned before, if you buy a car and do Uber with it, then it's an asset because you are putting money in your pocket. You must be able to control cash flow. Just look at these National Football League players who makes millions of dollars in their 20s. In 2 years most of them are broke. Because it's hard for them to control cash flow. Another point to have in mind is people. This is not a subject that I would like to talk about, but people is an asset or liabilities. Let me explain a few points here. For example, if you are young and have children, the child is a liability. Children are expensive and they don't get cheaper. Every year they get more expensive, then they have to go to college, and things get even more expensive. The reality is that kids cost money. They take the money out of your pocket. It's definitely a liability. Also, as people get older, your family members will become a liability. As your parents get older, you should pay long-term health care for them. These are things that young people don't think too much about. Data and statistics show that the average person will spend 80% off their money in the last 2 years of life. Medical expenses go to the roof, and insurance companies are canceling. Your saving will be depleted and the cash flowing out. Another subject is 401k. Is this an asset or liability? Well, 401k, IRA, and pensions are all liability. There is no guarantee that they will be there. And lastly, divorces. This is called human liability. You married a beautiful woman, got divorced and that beautiful woman will cost you thousands of dollars a year in alimony. So, that beautiful wife and the child support will make your cash flow go out of your pocket. My advice to you is, always follow and pay attention to the cash flow. Is the money coming or going out of your pocket? That is the question you should ask yourself. That is it for today's video. I hope you were able to learn a thing or two about handling your cash flow and where you should get started if you want to achieve financial freedom. We will see you in the next video.